A very pleasant afternoon to all the learned professionals, seniors, colleagues, distinguished guests joining us physically and virtually. On behalf of the Maharashtra Tax Practitioner Association and All India Federation of Tax Practitioners, Western Zone, I warmly welcome to Day 2 of the TDS Conclave 2026. Yesterday, we had an enriching experience decoding the new framework, and today we are continuing our journey towards complete TDS mastery. To officially begin today's proceedings, I have the distinct honor of inviting our esteemed dignitaries to grace on the dais. I request our dynamic president of MTPA, Advocate Anuruddha Chavan sir, to escort our today's faculty CA Rajesh Mehta sir. Joining us virtually, I welcome our esteemed chairman of AFTP West Zone, CA Akshay Modi sir. I invite past president Advocate Narendra Sonan sir, Vice President of MTPA, Advocate Jnaneshwar Narad sir, to come on dais. I also request fourth chairman, Sri Milind Hendre sir, to come on dais. Thank you.
Vice Chairman, AFTP Narendra Sonan.
Thank you all. I request our AFTP West Zone Vice Chairman, Advocate Narendra Sonan sir, to deliver his remarks. Sir, please.
Good afternoon. Respected President, Advocate Anuruddha Chavan, Chairman CA Akshay Modi, our distinguished faculty, CA Rajesh Mehta ji from Indore. Actually, we are honored to see him physically here at Pune. Learner professionals, respected seniors, dear colleagues, friends, a very good afternoon to everyone. It is my privilege and honor as the Vice Chairman of AFTP West Zone to welcome all to this TDS Conclave 2026, jointly organized by the All India Federation of Tax Practitioners, Western Zone, and Maharashtra Tax Practitioners Association. They say knowledge is the best investment. It pays the highest dividend. In taxation, this is even more true. Every amendment brings new opportunities to learn, but also new responsibilities to comply. The landscape of the deduction at source is changing rapidly. The new TDS framework, evolving compliance requirements, and increasing digital scrutiny make it essential for every tax professional to remain updated. Today's conclave has been thoughtfully designed to transform complex provisions into practical understanding. We are indeed fortunate to have some of the finest experts like Rajesh Mehta ji in the country with us, who will decode the law, explain its practical implications, and guide us through real-time challenges. I encourage every participant to actively engage, ask questions, and make the most of these learning opportunities. AFTP has always believed that sharing knowledge is the noblest form of professional service. Together with the MTPA, we remain committed to empowering tax professionals through continuous education and quality learning initiatives. Before I conclude, let me leave you with a thought. The future belongs not to those who know everything, but to those who never stop learning. Let us learn together, grow together, and continue serving the nation with the competence, integrity, and professionalism. I wish today's TDS Conclave a grand success and a totally encouraging experience to all. Thank you. Thank you very much. Jai Hind, Jai FTP, Jai MTPA. Thank you.
Thank you very much, sir. Moving forward, it is an absolute honor and distinct privilege for me to introduce our eminent faculty for today. Based out of Indore, sir has been a stalwart in the field of profession, holding an illustrious practicing career spanning more than 30 years. He is a fellow member of ICA and also holds DISA qualification. When we look into the contribution to professional bodies, his leadership profile is incredibly vast. He served as a national Secretary of General of the All India Federation of Tax Practitioners for the year 2023. He has been elected as the National Vice President of AFTP for 3 distinct terms for 2020, 2020-21 and 2024. He also led the Central Zone of AFTP as a chairman in the year of 2018 and 2019. He served as a treasurer of Tax Bar at Tribunal, Indore, and has previously managed responsibilities as a treasurer of the Tax Practitioner Association, Indore. His expertise isn't limited to organizational leadership. It reaches at the very policy-making tables of our nation. In 2021, the CBDT Minister of Finance selected him as one of the 10 members nationwide of the committee tasked for the smooth functioning of new income tax portal. Furthermore, he was part of the exclusive 40 members committee constituted by ICAI to review the provides critical suggestion on new Income Tax Act 2025. His deep academic contribution and recognized in prominent ICAI literature, including playing a key role in the technical guide, publication on religious and charitable trust audit, and guidance note on tax audit under Section 44AB. Today, he is one of the India's most sought after national speaker on direct taxes, specifically on complex dynamics on the new Income Tax Act, TDS, TCS, and capital gains. We are incredibly fortunate to have his expertise guide us throughout today. Conclave, ladies and gentlemen, please welcome us CA Rajesh Mehta, sir. Thank you. To express our profound respect and gratitude, I now request our President, sir, to felicitate CA Rajesh Mehta, sir, with a token of our appreciation. Thank you, sir. Ladies and gentlemen, compliance is an art, and understanding cross-border transaction requires absolute clarity. Our first session for today's focus on highly critical area, TDS on payments to NRI, TCS collection and caution. Without further ado, I hand over to mic to CA Rajesh Mehta, sir, to enlighten us. Sir, please.
माइक उधर कौन सा है? नहीं, इसका माइक नहीं.
Yes, good afternoon, friends. FTP West Zone Chairman Akshay Modi ji, Vice Chairman Narendra Sonwani ji, MTPA President Anurudra Chavan ji, Dhyaneshwar Narwade ji, Navnath Nalwade ji, and all my professional brothers. today I am to discuss some important points relating to TCS and TDS on payment to non-residents. So, dear friends, the TDS and TCS provisions are now covered under Chapter 19 of the New Income Tax Act 2025. So, TCS provisions were earlier covered under Section 206C in the Income Tax Act 1961. Screen share. Screen share. Yeah. Screen share. Yes, now. So my screen is visible. My screen is visible to everyone. Okay. So earlier the section 206C was about the TCS provisions. So now in the new Income Tax Act, TCS provisions have been covered under section 394 of the Income Tax Act 2025. So all the various TCS rates have been covered in the table under section 394 subsection 1. Here they have mentioned that every person as specified in column C of the specified table as table is given under section 394(1) shall collect tax on receipts specified in column B of the specified table at the rate specified in column D of the table at the time of debiting of the amount payable by the buyer or licensee or lessee to the account of the buyer, licensee or lessee, or at the time of receipt of such amount from the said buyer or licensee or lessee in cash or by way of check or draft or any other mode, whichever is earlier. So these are the various categories which are liable to be covered under TCS provisions. So first of all is the serial number 1 under this table 394(1). Sale of alcoholic liquor for human consumption. The rate is 2% TCS. Earlier the rate was 1%, so this has been increased to 2%. Sale of tendu leaves, this is subject to 2% TCS. Sale of timber, whether obtained under a forest lease or otherwise, or any other forest produce, not being timber or tendu leaves obtained under a forest lease. So this is liable for TCS at the rate of 2%. Sale of scrap. Sale of scrap is very much relevant for all of us in our day-to-day transactions of our clients, because various scrap type items, nature of scrap has been are being sold by various industries, various traders, manufacturers, and various persons liable for TCS. So the earlier rate was 1%, so which has been increased to 2% with effect from 1st April 2026. So who is the person liable for TCS? Here it is mentioned that seller is liable for TCS. The definition of seller is given under section 402 subsection 33 clause A of this chapter, which I will discuss later on. So as regards scrap, what is the scrap? So this is very important thing. Definition of scrap is given the waste and scrap arising out of manufacturing process, etc. So there is a judgment of Gujarat High Court in case of CIT TDS versus Priya Blue Industries. In this judgment, Gujarat High Court have held that the goods which is usable as such is not liable for TCS on scrap. So scrap means which is not usable as such. If there is any scrap, which is usable as such without any further processing, without any further manufacturing process, then it is not liable for TCS. So in that judgment, Honorable Gujarat High Court have held that even if commercially termed scrap, it does not fall within the definition of scrap under section 206C, since the statutory definition requires the material to be usable, unusable as such because of breakage, cutting, wear or other similar reasons. So there is a judgment of Kerala High Court also as regards TCS on timber. In case of timber, if it is being used for trading purpose only, then it is liable for TCS. If anyone is purchasing as a end user, or if anyone is purchasing as a manufacturer, then they are not liable, then seller is not liable to collect TCS from the purchaser who is a manufacturer or who is an end user. So in the judgment of Excel Timbers Private Limited versus ITO, it was held that TCS has to be effected by first Indian importer in case of import of timber. So Excel Timbers Private Limited told that we are the buyer of goods. We have purchased the goods from out of India. So since we are the buyer, so we are not liable for TCS, and the seller is situated out of India, so he is also not covered under TCS provision. So Kerala High Court held that the Excel Timber is the first importer in India. So first sale effected by Excel Timber in India has been performed by petitioner. Means Excel Timber have done this sale in their capacity as a seller. So the petitioners do not fall into the shoes of buyers with reference to the mandate of section 206C and stand to be the sellers, whose duty was only to collect tax at source when sale was effected to the buyers after clearance from the customs department. TCS under section 206C subsection 1. So earlier under the old act, this was section 206C subsection 1, and now it is under section 394(1). TCS shall not be required to be collected from a resident buyer if the goods are utilized for the purpose of manufacturing, processing, producing article or things, or for the purpose of generation of power and not for trading purposes. So if any ultimate buyer is purchasing the goods, then he is exempt. But if any of the person who is engaged in business but purchasing the goods for the purpose of manufacturing, processing or producing article or things, then by way of furnishing form number 27C, the new form number is 127. So then he will not be subjected to TCS. So seller will not be required to collect the TCS on sale of such goods. There is a judgment of Jaipur ITAT that when you are required to, what is the time limit and what, at which time you are required to collect the form number 27C from the buyer, whether just at the time of sale of goods, before the sale of goods, or within 1 month or whatsoever. But there is no such time limit prescribed under the new Income Tax Act or under the new income tax rules. So still there is no time limit prescribed for furnishing form number 27C by the buyer to the seller. But whenever the form number 27, it is, however, it is advisable that form 27C should be collected either at the time of sale, first sale of goods, or before the sale of goods. And as per the law, it has to be submitted within 7 days from the end of the month in which the goods has been sold. So the time limit for submitting to the income tax department is mentioned, but when it is to be obtained from the purchaser, this is not mentioned. Then what is the scrap? Because the definition of scrap is very much relevant, because there have been lot of dispute during last 2-3 decades on the definition of scrap. First of all, why there is a TCS provision on sale of scrap? What is the special thing in this? About 3 decades ago, the TCS on scrap provision was introduced under the Income Tax Act 1961. Because earlier many of the manufacturing industries which were liable for excise duty they used to sell the finished goods by showing it as a scrap. So excise department wanted to check that how much percentage of scrap is being sold by the industries. So to insert a checkpoint on percentage of scrap being sold by the manufacturing industries and to cover the excise duty and to stop the revenue leakage of excise duty, the income tax department was advised by the excise department to introduce TCS on scrap, because scrap was not liable for excise duty in earlier years. But now GST is there since last 9 years, and under GST and in the VAT Act also, the scrap is already liable for GST. So there is no exemption to any such scrap, but still this provision is continuing here. So we have to be careful that what is the scrap and under which circumstances our client is liable for collecting the TCS on scrap. Scrap means waste and scrap from the manufacture or mechanical working of material, which is definitely not usable as such because of breakage, cutting of wear and other reasons. So the three important things are there. The scrap should arise from the manufacture or mechanical working of material, and it should not be usable as such, and or it should be waste. If any of the above condition is not satisfied, then that item will not be treated as a scrap and therefore not liable for TCS. CBDT had issued a circular in the year 2012 that even if any person is selling the scrap, he is also liable to collect the TCS. So even if he is not a manufacturer, but he is a trader, he is a dealer of scrap, he is trading in scrap, then he is also liable to collect the TCS. There is a judgment of Bharti Auto Products versus CIT, ITAT Rajkot, third member bench decision was there. In that case, they have held that scrap even not arising out of manufacturing is also liable to TCS, because heading of the chapter 17B itself says that profit and gains from the business of trading in scrap, etc. So under the old act, there was a provision that if any of the scrap is arising out of the or being traded, then profit and gains from business of trading in scrap is covered. But under the new Income Tax Act, under section 394, this heading of the earlier chapter is now removed. Now the heading of TCS provision is only collection of tax at source. So let us see that what further developments or further litigation arise in case of the persons who are trading in the scrap. But still, under the new act, we should advise our client that wherever they think that scrap is liable for TCS, they are trader, our clients are trader, even though they should collect the TCS until any new favorable judgment come in favor of the assessing. So again, there are what were the disputes, landmark disputes regarding the TCS on scrap. Scrap does not suggest that the scrap should be generated by the seller himself. So there is a judgment of ITAT Jaipur also in case of Chanmal Sancheti versus ITO. They have also held that it is not necessary that the seller should himself have generated the scrap out of the manufacturing process. Even if he is trader, he is liable for TCS. Then there was a judgment of ITAT Ahmedabad in case of Nevine Fluorine International. That was a judgment in favor of the assessee, in which it has been held that scrap should arise out of manufacturing or mechanical working of material, in absence of which no requirement to collect TCS. But various other judgments and special Rajkot bench Bharti Auto has held that trader is also required. Then again, there is a judgment of Jaipur ITT in case of sale of railway scrap by dealer being certainly not usable due to its breakage or wear and tear. Same should be subjected to TCS during the resale. Then TCS on sale of minerals. being coal or lignite or iron ore. So rate of TCS is 2%. Sale consideration exceeding 10 lakh rupees in case of motor vehicle or any other goods as may be notified by the central government. Here the TCS rate has been kept unchanged at the rate of 1%. So many other items have been subjected to TCS at the rate of 2%, but here for the serial number 6, TCS rate is only 1%. Remittance under LRS of an amount or aggregate of the amount exceeding 10 lakh rupees. TCS rate is 2% for the purpose of education or medical treatment. Earlier, this rate was 5%, so now it is reduced to 2% with effect from 1st April 2026. And 20% for the purposes other than education or medical treatment on amount in excess of rupees 10 lakh. Overseas tour program package, including expenses for travel or hotel stay or boarding or lodging or any such similar or related expenditure. Then TCS rate is 2%. Earlier that rate was 5% up to 10 lakh and 20% beyond 10 lakh. So now it is 2% on all expenses of overseas tour program package. TCS on use of parking lot or toll plaza or mine or quarry for the purpose of business, excluding mining and quarrying of mineral oil, including petroleum and natural gas. So licensor or lessor is required to collect the TCS at the rate of 2% on use of parking lot, toll plaza, mine quarrying, etc. The definition of licensor or lessor is given under section 402, subsection 22. TCS on grant of lease under what was the provision under the old act, section 206C(1)(c). For the purpose of section 206C(1)(c) on parking lot, toll plaza or mining or quarry, every person as defined under section 231 of the Income Tax Act should collect TCS. Earlier this was the provision. Thus, the central government, state government is not a person as per section 231, and under the new act, section 2 clause 2 clause 77 in the new act, hence cannot be made liable to collect TCS under section 206C(1)(c) and in the new act also, because the person is not covering the central government and state government. There is a judgment of ITAT Cuttack bench in the case of Sri Jagannath Temple Managing Committee, in which it has been held that Sri Jagannath Temple Office is not a person under section 231. Therefore, it is not liable to collect TCS. Then what declarations can be given for no TCS? Irrespective of anything contained in subsection 1, table serial number 1 to 5. The collection of tax shall not be made in respect of receipts specified in serial number 1 to 5 in respect of the buyer who is resident in India, if he furnishes a written declaration in duplicate in such form and manner as may be prescribed to the person responsible for collecting tax, mentioned that such goods are to be utilized for the purpose of manufacturing, processing or producing article or things or for generating power and not for trading purposes. So if such type of declaration is given by the person, then this will not be, then seller is not liable to collect the TCS. Then as already told that when the form 27C is to be submitted before the CIT or CCIT, no TCS on LRS if already done in overseas tour program package, or if any remittance is out of education loan from any financial institution or loan from any approved charitable institution. The collection of tax shall not be made by authorized dealer in respect of receipt specified in subsection 1, serial number 7 of the LRS on such amount on which tax has been collected by the seller in respect of receipt referred to in subsection 1, or if the amount being remitted is out of loan obtained from any financial institution. the collection of tax shall not be made by the authorized dealer or seller in respect of receipt specified in subsection 1, table serial number 7 and 8. So 7 and 8 is relevant to LRS and overseas tour program package. If the buyer is liable to deduct tax at source under any other provision of this act, and he has deducted such tax. So if any of the buyer is liable to deduct the tax on the same goods which is subjected to TCS also, and the buyer has deducted the tax, then seller is not liable for TCS on the same goods. For the purpose, then earlier as I had discussed that forest produce is also timber and forest produce is liable for TCS. So what is the forest produce? Definition of forest produce shall be, for the purposes of this section, forest produce shall have the same meaning as defined in any state act for the time being in force or in the Indian Forest Act 1927. So definition as per Indian Forest Act of the forest produce is, it includes the following, whether found in or brought from a forest or not. That is to say, timber, charcoal, wood oil, resin, natural varnish, bark, lac, etc. So these items, even if found in or brought from a forest or not, अगर कोई वस्तु फॉरेस्ट से मिली है या नहीं मिली, बट वो अगर टिम्बर है, चारकोल है, इस तरह की जो भी वस्तु है, चाहे वो फॉरेस्ट से प्राप्त हुई हो अथवा नहीं हुई हो, बट दीज आर लाइबल फॉर टीसीएस. बट अंडर द सीरियल नंबर 2, द फॉलोइंग व्हेन फाउंड इन और ब्रॉट फ्रॉम ए फॉरेस्ट. तो सीरियल नंबर बी में जो फॉरेस्ट एक्ट का डेफिनेशन का सेक्शन 2 क्लॉज 4 का बी है, उसमें उन्होंने कहा है द फॉलोइंग व्हेन फाउंड इन or brought from a forest, then only liable for TCS. So which are these things? This is tree and leaves, flowers and fruits, and all other parts or produce not here in above mentioned of the trees. तो trees और उसकी पत्तियां, उसके flower, fruits वगैरह जो भी हैं, वो अगर forest में पाए गए हो या forest से लाए गए हैं, then only these are liable for TCS. Plants not being trees, including grass, creepers, etc. Wild animals and skins, these are, if found in or brought from a forest, then liable for TCS. TCS on motor vehicle and specified luxury goods exceeding rupees 10 lakh. CBDT had issued a circular number 36/2025, which will also be effective and applicable for the new Income Tax Act 2025 also. In that circular, they had notified 10 items of high value luxury goods, which were liable for TCS if their value is exceeding rupees 10 lakh for each item. So watch, art collectibles, yachts, sunglasses, handbag, shoes, sports wear, home theater system, and horses as specified luxury goods liable for TCS at the rate of 1%, where the value of a single item exceeds rupees 10 lakh. So these are the items: motor vehicle, wristwatch, art piece, painting, sculpture, antique, collectibles, coin or stamp, yacht, sunglasses, handbag, shoes, sports wear, etc. Interpreting the 10 lakh rupees threshold for TCS. This is per item and not aggregate. So if you have purchased two different items, one item of rupees 6 lakh, second different item is of rupees 5 lakh. So aggregate is 11 lakh, but individual item is not more than 10 lakh. So it is not liable for TCS. And TCS, in case of these luxury items or in case of car, motor vehicle, has to be collected at the time of receipt of payment. So other provisions of TCS are applicable at the time of debit or at the time of receipt, whichever is earlier. But in case of this, it is applicable at the time of receipt of payment only, not at the time of debit, whether received as an advance or at the time of delivery, and on the entire sales consideration once the per item threshold is crossed the 10 lakh limit. TDS on payment to non-residents. So payment to non-residents were earlier covered under Section 195 in the Income Tax Act 1961. Now, under the new Income Tax Act 2025, the TDS on payment to non-resident, these provisions are covered under Section 393, subsection 2, where any income or sum of the nature specified in column B of the specified table is credited or paid by the person specified in column D of the specified table during the tax year to a non-specified, non-resident specified non-resident person specified in column C of the specified table. The person responsible for paying such income or sum shall deduct income tax on the amount of such income or sum at the rate specified in the column at the time of credit of the income or sum to the account of the payee, or at the time of its payment in cash by check, whichever is earlier. So under Section 194E, earlier this was 194E, now this is covered under serial number 1 of the 393 subsection 2 table. Any income referred to in Section 211, old Section 115 BBA, winnings from lottery, crossword puzzle, card game, bettings, gambling, similar nature, and horse races. Who is the person from whom TDS is to be deducted? A non-resident sportsman, including an athlete or an entertainer who is not a citizen of India, or a non-resident sports association or institution. Payer means any person, and the rate of TDS will be 20%. There is a judgment of Pilcom versus CIT, Honorable Supreme Court, in which it has been held that Section 194E, the new Section 393, subsection 2, serial number 1, cast an independent and mandatory withholding obligation on the payer at the time of payment. The payer cannot on its own apply a beneficial DTAA rate at the deduction stage without the payee obtaining the requisite certificate or adjudication. So if DTAA is to be applied, then certain documents have to be obtained, then only DTAA can be applied. Otherwise, it has to be deducted at the rate specified under 393 subsection 2 table serial number 1. 194 LC, it is not in our day-to-day use, 194 LC, so we may skip these items. Any income in respect of units of a mutual fund specified under Schedule 7, serial number 20 or 21, or in respect of units from the specified company. Old section was 1023D. So any resident, non-resident person, not being a company or a foreign company, and payer is any person, then rate of TDS will be 20%, or DTAA, whichever is less. 196B, any income in respect of units referred to in Section 208, income of an offshore fund. So this last serial number of this table, Section 393, subsection 2, has total 17 items, out of which the serial number 17 is going to be of much use in our day-to-day practice, because here, earlier this was covered under Section 195, subsection 1. So which items are liable for TDS on payment to non-resident under this category? Any interest, not being interest referred to against serial number 2, 3, 4, and 5, or any other sum chargeable under the provisions of this Act. So if you are making any payment to any non-resident which is chargeable under the provisions of this Act, not being income chargeable under the head salaries, then it will be liable for TDS at the rate applicable, rates in force. So any person, even if he is an individual or HUF not liable for audit, even though if he is making any payment to non-resident which is chargeable to income tax in India, then he will have to deduct the TDS at the rates specified in part 2 of the schedule 1. Non-resident TDS category, serial number 17. So there is a judgment of Honorable Supreme Court in case of GE India Technology. The Supreme Court held that the obligation to deduct TDS under section 195, now largely covered under 393 subsection 2, read with section 395, arises only if the sum paid is accessible to tax in India. A person is not required to obtain a nil or lower rate deduction order merely to avoid deduction on sums that are not chargeable to tax at all. Then there is a landmark judgment of Engineering Analysis Center of Excellence Private Limited versus CIT, Honorable Supreme Court, in which it has been held that the Supreme Court held that payments for the use of shrink-wrapped software without transfer of any copyrights do not constitute royalty under the Act or the applicable DTAA. Consequently, no obligation to deduct TDS on such payments. So if we are purchasing any software from non-resident, which is a shrink-wrapped software and no copyright has been transferred to us, then this will not be liable for TDS under section 195 old and 393 subsection 2 is serial number 17 is the new section. For serial number 17, the obligation to deduct tax at source and comply with the provision of this serial number extend to all persons, resident or non-resident, whether or not. Means that if the payer is, even if the payer is in India, he is a non-resident and he is making payment to non-resident, even though he is liable for TDS under 393 subsection 2, serial number 17. A residence or person has a residence or place of business or business connection in India or any other presence in any manner whatsoever in India. If the person to whom we are making payment is not having PAN number, then whether section 206AA of the old act will be applicable. So there is a judgment of ITAT Delhi in case of Air India Limited versus ITO, in which they have told that 20% TDS as per section 206AA is not required to be deducted from the non-resident, even if he is not having any PAN number. So ITAT held that they have rightly deducted tax at the rate of 10%, because section 206AA cannot have overriding effect on DTAA. DTAA will supersede the 206AA provisions. Rates in force. So as you have seen that under the TDS provisions at various places, it has been mentioned that TDS is liable to be deducted at the rates in force. So what are these rates? Where the table specifies rates in force, the applicable TDS rate is the rate specified for the relevant tax year under the Finance Act's Part 2 of the first schedule. So every year Finance Act is announced in the Parliament. After the bill, it becomes the Finance Act. So in the Finance Act, in first schedule Part 2, the rates in force are given. So that has to be followed. So under the section 402 of the TDS and TCS chapter, various interpretations are given at the end of this chapter. This section is section 402. So various definitions by way of interpretation are given under section 402. So while taking any decision on TDS and TCS applicability, we should always refer to various interpretation given under section 402. Then we can only decide that whether this is liable for TDS or TCS or not. So these are various definitions for the purpose of this 393 subsection 2 payment to non-residents. Then for the purpose of this TCS provisions, definitions of buyer and seller, etc. are given. So what is the definition of buyer for the purpose of 194Q? Purchase of goods referred to in 393 subsection 1. So earlier 194Q, now it is covered under 393 subsection 1, table serial number 82. A person whose total sales, gross receipt or turnover from the business carried on by him exceed 10 crore rupees during the tax year immediately preceding the tax year in which the purchase of goods is carried out. So under the new act, whether our client is covered for TDS provisions under section 393 subsection 1 serial number 82 or not. So we will have to see for financial tax year 2026-27. We will have to see that whether the turnover or gross receipt of him during the preceding tax year means financial year 2025-26. If it was exceeding rupees 10 crore, then he is liable to collect and deduct the TDS under 393(1) serial number 82. Any person as the central government may notify for this purpose, they will be exempted from TDS under this clause. Then what is the definition of buyer? Sale of goods referred to in 394 subsection 1, serial number 1 to 5. So for TCS provisions, serial number 1 to 5, what is the definition of buyer? A person who obtains in any sale by way of auction, tender, or any other mode goods of the nature specified in section 394 subsection 1 serial number 1 to 5 or the right to receive any such goods. The persons excluded from the provisions of this TCS are if the buyer is a public sector company, buyer is a central or state government, etc., then no TCS will have to be done because these are not covered in the definition of buyer. Definition of buyer for the purpose of sale of motor vehicle or any other goods, serial number 3. A person who obtains in any sale goods of the nature specified in 394 subsection 1 serial number 6. Person excluded are the person as specified in serial number 2DB being the central government, state government, etc. These are not liable for TCS in case of sale of motor vehicle or any public sector company engaged in the business of carrying passengers. Buyer for the purpose of remittance under LRS. A person remitting amount under the LRS of the RBI. Person excluded. Any person as per serial number 2DA public sector bank, public sector company or serial number 3DB local authority or any other person as the central government may notify. Who is the buyer for the purpose of sale of overseas tour program package? Any person who purchases an overseas tour program package. So every person who is purchasing except the public sector company and local authority are covered for TCS. Licensee or lessee definition is given under section 402(21). Licensor and lessor definition is given under section 402(22). So as I discussed in the earlier slides that in case of Jagannath Temple judgment, ITAT Cuttack has held that Jagannath Temple is not a person because it is a central government body. It is a body established by central government, Jagannath Temple Managing Committee. So they were not a person. So they are not liable to collect TCS on mining and quarry lease. So who are the licensor or lessor who are giving the license for mining and quarrying? Any person who grants a lease or license or enters into a contract or otherwise. So here in the red fonts, you will see that any person, they have used here the words any person. So if who is any person, that is not defined here. So for this purpose, we will have to go to section 2, clause 77. What is the definition of person there? Their person means individual, HUF, company, firm, AOP, BOI, etc. But central and state government is not a person under section 277. So in my opinion, central and state government, even if giving any mining or quarry lease, they are not licensor or lessor. So until and unless this definition is amended, central government and state government are not liable to collect TCS in case of mining and quarry of the lease. But since many decades, they are collecting TCS on such licenses. So I think in the coming years, the government will amend the definition and will define any person to include central and state government also. Then only they can collect the TCS in case of mining quarrying licenses. Seller for the purpose of section 394 subsection 1 serial number 1 to 6 is the central government. So here you will see that in case of definition of seller, they have mentioned here, they have not mentioned here the word person. They have mentioned defined who are the seller. So they have clearly defined central government, state government. So if central government is selling any of the goods, being a forest produce, being timber, then also they are liable for TCS because they have already been defined. They are not mentioned as a person here. Or any individual or HUF whose turnover exceeds rupees 1 crore, or in case of profession, his gross receipt exceeds rupees 50 lakh, then they are treated as a seller for the purpose of serial number 1 to 6 of section 394 subsection 1. Forms and due dates. Declarations and lower and nil certificates. So earlier there was form number 15G and 15H. So under the new income tax rules, this form number is 121 and the rule number is 211. In the old income tax rules, this was rule number 29C. So 15G, 15H is applicable declaration by the person claiming receipt of certain income without TDS under section 393 subsection 6. Earlier form number 27C, which was to be furnished by the buyer if they are the manufacturer or the power generating unit. So the new form number is 127 and new IT rule is 212. Earlier in the old income tax rules, the rule number was 37C. Declaration by a buyer for no TCS under section 394 subsection 2. Old form number 13. जो फॉर्म हम लोअर रेट के लिए अप्लाई करते थे उसका पहले फॉर्म नंबर 13 था, जिसका नए इनकम टैक्स रूल्स के अंदर फॉर्म नंबर 128 एंड न्यू आईटी रूल 2026 द रूल नंबर इज 213. अर्लियर देयर वर 4 डिफरेंट रूल्स 28, 28AA, 28AB एंड 29. सो ये चारों रूल्स को उन्होंने इस नए इनकम टैक्स रूल्स में रूल 213 में मर्ज कर दिया है. सो नाउ डिफरेंट रूल्स आर नॉट देयर. So application for lower or nil TDS TCS certificate, old rule 37G, 37H also merged in the new rule 213. तो पुराने TDS TCS के जो अलग अलग फॉर्म नंबर वगैरह रूल्स थे, वो सारे रूल्स को उन्होंने एक ही रूल्स 213 में मर्ज कर दिया है. फॉर्म नंबर 128 is for lower rate or nil rate TDS application. Form number 15E, new form number 129. And new income tax rule number is 214 and old income tax rule number is 29BA, which is applicable for application by the payer under section 395 subsection 2 or section 400 subsection 3 for determination of appropriate proportion of sum other than salary payable to a non-resident. If any of the person is making any payment to non-resident and it is liable for TDS, then if his whole of the income is not chargeable to tax, then we may apply in form number 129 for lower TDS before the assessing officer. Old form number 16. So जो सैलरीड एम्प्लॉयज को अपने एम्प्लॉयर से फॉर्म नंबर 16 टीडीएस सर्टिफिकेट के रूप में पहले प्राप्त होता था, उसका फॉर्म नंबर अब हो गया है 130. सो 130 नंबर इज द न्यू फॉर्म नंबर एंड न्यू इनकम टैक्स रूल इज 215. ओल्ड रूल वाज 31(1)(a). फॉर्म नंबर 16(a). सो अदर देन सैलरी ज्यादातर टीडीएस के सर्टिफिकेट जितने भी होते हैं वो सारे फॉर्म नंबर 16(a) में इश्यू किए जाते थे, जिसके लिए अब नया फॉर्म नंबर हो गया 131. TDS certificate for all non-salary payments. फॉर्म नंबर 16B. 16B का नया फॉर्म नंबर हो गया 132. So 16B was applicable for the purpose of 26QB, जो पहले हम 26QB फिलअप करते थे 194 IA के लिए, 26QC, 26QD, 194M के लिए 26QD होता है, 194 IB 50,000 रुपए पर मंथ से अधिक का रेंट के लिए होता है, और 26QE 194S वर्चुअल डिजिटल एसेट. इन सभी के लिए पहले अलग अलग फॉर्म स्पेसिफाइड थे, 26QB, QC, QD, QE. ऑल दिस फॉर्म हैव बीन मर्ज्ड इनटू द सिंगल फॉर्म नंबर 141. नए फॉर्म नंबर 141 में इसको उन्होंने मर्ज कर दिया है, और उसका टीडीएस सर्टिफिकेट जो जनरेट होगा वो फॉर्म नंबर 132 में होगा. 27D जो टीसीएस के लिए, जो टीसीएस का सर्टिफिकेट इशू किया जाता है, जैसे 16A के लिए 131 नया फॉर्म हो गया, उसी तरह टीसीएस का जो सर्टिफिकेट है 27D की बजाय अब नया फॉर्म नंबर हो गया 133 एंड न्यू रूल इज 215. सर्टिफिकेट ऑफ टीसीएस अंडर सेक्शन 394 सबसेक्शन 1. 49B जो पुराना फॉर्म नंबर था उसका नया नंबर हो गया 134. What was the use of form number 49B? Application for allotment of 10 TDS and TCS गवर्नमेंट एंटिटी. तो अब उन्होंने फॉर्म नंबर 49B को दो पोर्शन में डिवाइड कर दिया है. गवर्नमेंट एंटिटी के लिए फॉर्म नंबर 134 हो गया है. अदर देन गवर्नमेंट जो भी लोग हैं जिनको 10 नंबर अप्लाई करना है उनके लिए 135 हो गया है. So form number 49B is now divided into two different parts. One is the 134 and second is the 135. So if our assessee is other than government, then we will have to apply form number 49B in new form number 135. 26B, refund of sum paid under chapter 19B. अगर किसी assessee का TDS ज्यादा कट गया है, ज्यादा उसने जमा कर दिया, कट गया नहीं, ज्यादा उसने गलती से ज्यादा जमा करवा दिया है, वो टीडीएस हमें रिफंड चाहिए, देन वी विल हैव टू मेक एन एप्लीकेशन इन फॉर्म नंबर 26B. सो न्यू फॉर्म नंबर इज 139. 139 में अप्लाई करके एसएससी डिडक्टर ने अगर ज्यादा टीडीएस जमा कर दिया गलती से, ही कैन टेक द रिफंड. टीडीएस ऑन सैलरी के लिए हम पहले जो क्वार्टरली टीडीएस स्टेटमेंट फाइल करते थे, टीडीएस स्टेटमेंट को हम हमारी रूटीन भाषा में बोलते हैं टीडीएस रिटर्न, पर इनकम टैक्स रूल्स में टीडीएस रिटर्न को उन्होंने हर जगह लिखा है टीडीएस स्टेटमेंट. सो चॉइस क्यू में जो टीडीएस स्टेटमेंट फाइल होता था क्वार्टरली, अब उसका नया नंबर हो गया फॉर्म नंबर 138. सो टीडीएस ऑन सैलरी का रिटर्न, टीडीएस ऑन सैलरी का स्टेटमेंट फॉर्म 138 में फाइल होगा. 26Q उसका नया फॉर्म नंबर हो गया नाउ 140. So quarterly TDS statement of payments other than salary will be covered in 26Q. TDS on non-salary payment to non-resident and TDS statement for non-salary non-resident 27Q. जो पहले 27Q था, now that is form number 144 and TCS statement. तो TCS का पहले जो हम क्वार्टरली रिटर्न फाइल करते थे, क्वार्टरली TCS स्टेटमेंट फाइल करते थे, डेट वाज 27EQ. Now new form number is 143. Form number 15CA. In case of remittance out of India, form number 15CA हम भरते, फॉरेन रेमिटेंस डिक्लेरेशन फाइल्ड बिफोर द रेमिटेंस. फॉरेन में पैसा जाने से पहले ये फॉर्म फिलअप करना होता है, जिसके लिए नाउ न्यू फॉर्म नंबर इज 145. अर्लियर फॉर्म 15CB होता था, CA सर्टिफिकेट. If any sum is chargeable to tax in India, then there has to be CA certificate also in case of payment exceeding ₹5 lakh. So now new form number is 146. फॉर्म नंबर 12B जो पहले होता था उसका नया नंबर हो गया है 122। इंफॉर्मेशन टू द एम्प्लॉयर सेक्शन 392 सबसेक्शन 1। अगर एम्प्लॉइज अपनी अदर इनकम की कोई इंफॉर्मेशन देना चाहता है तो फॉर्म नंबर 122 में देगा। फिर एम्प्लॉयर टू फर्निश एम्प्लॉय पर्टिकुलर्स ऑफ परक्विजिट, एम्प्लॉयर के द्वारा अगर किसी एम्प्लॉय को कोई परक्विजिट्स का पेमेंट किया गया है तो उसकी इंफॉर्मेशन फॉर्म नंबर 12BA में एम्प्लॉयर पहले एम्प्लॉय को देता था, जिसके लिए नाउ न्यू फॉर्म नंबर इज 123। टीडीएस का चालान कब जमा करना होता है? इफ गवर्नमेंट ऑफिस कोई विदाउट चालान जमा कर रहे हैं तो उनको सेम डे डिपॉजिट करना होता है। गवर्नमेंट ऑफिस विदाउट चालान एंड ऑल अदर डिडक्टर अप्रैल से फरवरी तक के बीच का जो भी टीडीएस है वो हमें 7th ऑफ द फॉलोइंग मंथ, जिस मंथ में आपने टीडीएस किया है या टीसीएस किया है उसके जस्ट बाद वाले मंथ के 7 डेज में करना है। ऑल डिडक्टर एंड कलेक्टर इन द मंथ ऑफ मार्च, मार्च में जो भी आपने टीडीएस किया है वो आपको जमा करने के लिए 30 अप्रैल तक का समय रहता है। फिर टीडीएस स्टेटमेंट, क्वार्टरली टीडीएस टीसीएस रिटर्न की ड्यू डेट्स क्या है? अप्रैल से जून का जो क्वार्टर है उसकी ड्यू डेट है 31 जुलाई। तो अभी जो नए इनकम टैक्स एक्ट 2025 का फर्स्ट क्वार्टर ऑलरेडी एंड हो चुका है 30 जून को, तो उसके टीडीएस रिटर्न टीसीएस रिटर्न्स जो है अधिकांश लोगों ने फाइल करना निश्चित रूप से चालू कर दिए होंगे, जिसके लिए लास्ट डेट है 31 जुलाई। फिर सेकंड क्वार्टर जो है जुलाई से सितंबर उसके लिए 31 अक्टूबर है, अक्टूबर से दिसंबर के लिए 31 जनवरी है, जनवरी से मार्च के लिए 31 मई है। सो ओनली फॉर द फोर्थ क्वार्टर 1 मंथ एक्स्ट्रा हैज बीन गिवन। एंड पहले टीसीएस की रिटर्न्स की टीसीएस के स्टेटमेंट की फाइलिंग की ड्यू डेट 15 दिन पहले होती थी, अब उनको दोनों को उन्होंने सिमिलर कर दिया है। पहले टीडीएस से 15 दिन पहले टीसीएस का रिटर्न फाइल होता था, नाउ बोथ ड्यू डेट हैव बीन यूनिफॉर्म। 50 CA का जो नया फॉर्म 145 हो गया है, 50 CB 146 हो गया है। जो चैप्टर 19 है इनकम टैक्स एक्ट 2025 का, उसमें पार्ट ए से एफ तक के अंदर ये चैप्टर 19 के प्रोविजंस हैं। जो पुराने में इनकम टैक्स एक्ट में चैप्टर 17 होता था, इसमें चैप्टर 19 है। उसमें उन्होंने पार्ट ए बी सी डी ई एफ है, उसमें एक फर्स्ट इज द जनरल, सेक्शन 390 से 391 तक है। फिर डिडक्शन इन कलेक्शन एट सोर्स 392 से 402 तक है। एडवांस पेमेंट ऑफ टैक्स, कलेक्शन एंड रिकवरी, इंटरेस्ट चार्जेबल, लेवी ऑफ फी। पार्ट ए टू जनरल, ए टू जी फॉर कंपैरिजन। चैप्टर 17 जो पुराने इनकम टैक्स एक्ट में ये सेक्शंस थे, सेक्शन 390 391 न्यू वर्सेस ओल्ड। जो नए इनकम टैक्स एक्ट में सेक्शन 390 है वो पहले सेक्शन 190 199 और 206C होता था। तो 199 और 206C को भी उन्होंने नए इनकम टैक्स एक्ट में सेक्शन 390 में मर्ज कर दिया है। 391 डायरेक्ट पेमेंट, नाउ जो पुराना 191 था। टीडीएस ऑन सैलरी 192 और 192A में कवर्ड था, नाउ इट इज कवर्ड अंडर 392। फिर सेक्शन 393 का स्कोप बहुत वास्ट हो गया है। पहले टीडीएस के बहुत सारे अलग अलग सेक्शन थे, उन सभी को सेक्शन 393 में अलग अलग टेबल्स में उन्होंने मर्ज कर दिया है। लाइक सेक्शन 193, 194, 194A, 194B, BA, BB, C, 194H, IA, IB, etc. All these are in the 393 now. 393 subsection 2 is the NRI TDS. NRI TDS के जो सेक्शन 194E, 195, 195A, all these are covered under 393 subsection 2. पेनल्टीज के जो सेक्शन है वो नए इनकम टैक्स एक्ट में 427, 448, 449, जो हम अगली स्लाइड में हम डिस्कस करेंगे। सेशन जो हमारा सेकंड सेशन है वो टीडीएस की पेनल्टीज और टीसीएस की पेनल्टीज वगैरह इसी पर है। तो फी फॉर डिफॉल्ट इन 234E जो था वो 427 हो गया, 271C इज नाउ 448, एक्सेट्रा। पेनल्टी फॉर फेलियर टू फर्निश स्टेटमेंट्स 271H, मतलब टीडीएस स्टेटमेंट फाइल करने में अगर आपका डिले हो गया है तो 271H में जो पेनल्टी लगती थी, नाउ इट इज अंडर 461 271I। जो सीए सर्टिफिकेट फॉर्म 15CB के लिए होता था, उसके लिए पेनल्टी पहले 271I में लगती थी, अब वो पेनल्टी सेक्शन 462 में लगेगी। 272BB पेनल्टी फॉर फेलियर टू कंप्लाई विद द प्रोविजंस ऑफ 397, अब उसकी पेनल्टी 468 में लगेगी। पेनल्टी नॉट टू बी इम्पोज्ड इन सर्टेन केसेस, तो इफ देयर इज सम रीजनेबल कॉस्ट, वो 273B में कवर्ड था, उसको उन्होंने 470 में लिया है। 276B टीडीएस जमा नहीं करने पर जो प्रोसिक्यूशन होता था, नाउ दैट इज कवर्ड अंडर 476। 276BB जो टीडीएस टीसीएस का अगर आपने जमा करने में कोई फेलियर हुआ, दैट इज नाउ कवर्ड अंडर 477। देन 278AA जो पनिशमेंट नॉट टू बी इम्पोज, अगर वो कोई रीजनेबल कॉज एसएससी बता देता है तो उसका टीडीएस और टीसीएस का जो भी फॉल्ट है जमा करने का, उसको वो माफ किया जा सकता है बिफोर कमिश्नर, वो अगर अपना रीजनेबल कॉज बताता है तो उसके लिए रिलैक्सेशन प्रोविजन नए इनकम टैक्स एक्ट में सेक्शन 486 में दिया हुआ है। So these are the things, dear friends. So relating to these TCS provisions and TDS on NRIs, payment to NRIs, and next session 2 जो रहेगा उसमें हम कंप्लायंस और अदर ब्याज वगैरह क्या है, कंप्लायंस के क्या प्रोसीजर है, क्या प्रोविजन है, क्या पेनल्टीज है, क्या ब्याज वगैरह लगता है, वो हमारी नेक्स्ट स्लाइड्स में वी विल बी डिस्कसिंग। So I hand over mic to Milind Hendry.
Thank you, sir, for such a nice lecture and informative lectures also. Friends, we will join after 20 minutes break. So please do not discontinue the session. Thank you.
Hello. Welcome back to everyone. We move to straight into our final session of the conclave, compliance process and consequences, along with deep diving into updated resident payment frameworks. I request Mehta sir to take over and guide us throughout this technical session. Sir, please.
Dear friends, now this is the second topic of my today's deliberation, TDS TCS compliance, processing and consequences. So TDS and TCS is to be treated as a payment of tax on behalf of the person from whom such tax has been collected or from whose income such tax has been deducted. Rule 203 sub-rule 2, where the deductee files a declaration with the deductor that whole or any part of the income on which tax has been deducted at source is accessible in the hands of a person other than the deductee, and where the collectee files a declaration with the collector that the income of the collectee is accessible in the hands of any person other than the collectee, then the deductor or collector shall report the tax deduction or collection in the name of the other person, and accordingly credit for such TDS TCS shall be given to the other person. Under the old Income Tax Act, Section 199, Rule 37BA and Section 206C, Subsection 4, Rule 37I. As per old Rule 37I, where tax has been collected at source and paid to the central government, credit for such tax shall be given for the assessment year for which the income is accessible to the tax. Where the lease or license is relatable to more than 1 year, credit for TCS shall be allowed across those years in the same proportion. Subrule 2A for subsection 1F, 1G and 1H of old section 206C, credit shall be given to the person from whose account tax is collected and paid for the assessment year relevant to the previous year of collection. So, जो पुराने इनकम टैक्स एक्ट में सेक्शन 206C 1F, 1G और 1H था, उसका TCS का क्रेडिट दूसरे को ट्रांसफर नहीं किया जा सकता था और उसमें ईयर चेंज भी अलाउड नहीं था कि अगले साल आप उसको कैरी फॉरवर्ड नहीं कर सकते हैं. TDS TCS का क्रेडिट किस ईयर में मिलेगा? इन विच ईयर? क्रेडिट फॉर टैक्स डिडक्टेड or collected at source and paid to the central government shall be given for the tax year for which income corresponding to such tax is accessible. So TDS credit can be allowed only for the year in which income is going to be reported. Say for example, many times in the month of March, provision for payment to contractor is made or payment mobilization advance is paid to the contractor in the month of March. Say for example, 1 crore has been given to the contractor, on which TDS has been deducted at the rate of 1% in case of the individual payee. But contractor has not executed any work. The work will be started in the month of April, just subsequent tax year. So in that case, the TDS credit of 1% will be carried forward to the next year because the work will be executed in the subsequent tax year and it will be offered to income tax also in the subsequent tax year. So the year in which income is going to be taxed, only in that year TDS credit can be claimed. So this is mentioned under Rule 203 Sub-Rule 5. where tax has been deducted at source and paid to the central government, and income corresponding to such tax is assessable over a number of years. Credit for TDS shall be allowed across those years in the same proportion in which the income is assessable to tax. Many times, advance payment is made for some payments, but TDS is deducted on the whole of the payment. But income is going to be assessable over number of years. कई बार इनकम आने वाले 5 साल 10 साल में असेस होने वाली है, उस इनकम को आने वाले 5 सालों में डिवाइड किया जाएगा. In that case, the TDS credit shall also be carried forward. Corresponding and proportionate TDS credit shall be carried forward for the subsequent years, subsequent tax years in which income is assessable to tax. Where tax has been collected at source and paid to the central government, and lease or license. So similarly, in case of TCS provision, if lease or license is relatable to more than 1 year, then credit for TCS shall be allowed across those years to which the lease or license relates in the same proportion. Just if for next 10 years the license fee has been collected in advance, TCS has been collected in advance, but it is going to be taxable, relatable to in more than 1 year, then credit of TCS will also be carried forward in proportion for subsequent tax years. So as per old section 199 subsection 3 and old section 206C subsection 4, there was also same provision. The board may make rules for giving credit to a person other than those referred to in subsection 1 and 2, and also assessment year for which such credit may be given. So this was for TDS, and for TCS, section 206C subsection 4. Any amount collected under this section shall be deemed to be a payment of tax on behalf of the person from whom it was collected, and credit shall be given to such person or any other eligible person for the amount so collected in the relevant assessment year as per board rules. New rule 203 sub-rule 7, TDS TCS not transferable. There are certain circumstances in which TDS credit and TCS credit cannot be transferred to other person. So what are those circumstances? Irrespective of anything contained in sub-rule 1 to 6, for the purposes of section 393 subsection 3, table serial number 5, similar to old section 194 and relating to cash withdrawal from bank. If a cash is withdrawn from bank, bank is deducting certain amount of TDS. In that case, TDS credit cannot be transferred to another person. And under section 394 subsection 1, table serial number 6, motor vehicle or other valuable goods exceeding rupees 10 lakh. Similar to old section 206C subsection 1F, and in case of LRS, education, medical, other remittance, similar to old section 206C 1G and serial number 8, overseas tour package. In these cases, credit of TDS or TCS shall be given to the person from whose account tax is deducted or collected and paid to the central government for the tax year in which such deduction or collection is made. So in these circumstances, TDS or TCS credit cannot be transferred to other person. Credit for TDS TCS shall be granted on the basis of information referred to in sub-rule 1 and information in the return of income in respect of the claim for credit, subject to verification in accordance with the risk management strategy formulated by the board from time to time. So credit of TCS and TDS shall be on the basis of return of income and on the basis of online reflection like form number 26S. So this is the old rule of TDS, TCS credit to other person and carry forward to next year. Form number 122. This is the new form number 122, similar to old form number 12B. So rule 204 says that an assessee may furnish particulars in form number 122 to the person responsible under section 392 subsection 1, covering the income under salaries from any other employer during the tax year. Say, for example, many times during one tax year, the assessee change his job. He is transferred to any other employer. He has done the job under one company during first 6 months. In the subsequent 6 months of the tax year, he has joined any other employer. If he does not report his previous employer detail, then both employer will allow him slab rate exemption. Basic slab rate of 4 lakh will be allowed by both employer, and his TDS should be deducted at very less. But when the employee will file his whole year return of income, then his tax liability will increase and he will have to pay interest also. Therefore, it is advisable that whenever there is a change of salary, or if any of the assessee is receiving salary from any other employer, he may report that salary to his present employer at his choice. It is not compulsory, but he may report any other employer's salary to his present employer in form number 122. He may report the loss under the head income from house property for the same tax year. So if during that same tax year there is any loss from house property, from the self-occupied house property only, and he is under the old regime of tax slab, then he can report this house property loss also. Or any other income under any head not being a loss for the same tax year. Say, for example, he is having any share business also, he is having any other income from other sources, income from fixed deposit, income from recurring deposit, interest, etc. He may report all those income to the present employer, but he cannot report the loss. Say, for example, he is carrying on share business, he is having a loss from share business. Then this loss cannot be reported, and this loss will not be considered by the employer for the purpose of deduction of tax from the head salary. So he can report income under any other head not being a loss for the same tax year, or TDS or TCS under chapter 19B for the same tax year. If there is any other TDS or TCS also, he can report it to the employer. Form number 123. Earlier form number 12BA. Rule 204 says that if any the person responsible for paying salary, so the employer shall furnish particulars of perquisite in form number 123 to the employee, to the payee. Adjustment of excess or short deduction of TDS. So earlier there was section 192 subsection 3 in the Income Tax Act 1961. Under the new Income Tax Act, there is section 392 subsection 5 subsection subclause C. Under this section, the deductor may increase or reduce the amount to be deducted under this section to adjust any excess or deficiency arising out of any previous deduction or failure to deduct during the tax year. Say, for example, during the first 8 months of the tax year, the employer did not deduct any TDS from the employee's salary. But during last 4 months of the tax year, the employer deducted the tax of the whole year spread across only 4 months of the last months of the tax year. So whether is it justified? Section 192 subsection 3 and section 392 subsection 5C says that if there is any excess or short deduction in any of the month of the whole tax year, then it can be adjusted excess or short deduction. Furnishing of evidence of claims by the employee. Under section 392 subsection 5 clause B, for deduction of tax from income under the head salaries is made in form number 124. Old form is the form 12BB. Rule 26 was earlier. For the purpose of estimating income or computing the tax required to be deducted at source. So employee can report his other income, etc. All his advance declaration regarding the salary, how much salary is going to be, how much deduction he will be going to claim. how his tax liability is to be determined, that can be furnished to the employer in form number 124. As regards short deduction or excess deduction of TDS from salary, there is a judgment of Uttarakhand High Court in case of CIT versus Enron Expert Services Incorporation. In this case, the assessee employer did not deduct tax from salary payments every month throughout the financial year, but it computed and deducted the shortfall at the end of the financial year, and the revenue sought to levy interest under section 201(1)(a) for the intervening months. So department told that you have not deducted TDS equally across whole of the year, therefore you are liable to pay interest under section 201 subsection 1 capital A. So Uttarakhand High Court held that there was TDS on salary eventually deducted correctly and paid, but only at the year end rather than month by month. Interest under section 201(1)(a) could not be automatically levied merely because deduction was backloaded, absent a finding of default in the ultimate deduction and payment. Because there is no default, section itself allows that you can adjust excess or shortage at any time during the same tax year. So there is no default, therefore Uttarakhand High Court has rightly held. But there is a judgment of Ahmedabad, ITA number 420 Ahmedabad 2011, in which case the assessee did not deduct TDS from salaries in equal monthly installment, and the deficiency was made good only in the last months of the financial year, apparently as a matter of practice rather than a genuine estimation adjustment. Then ITAT held that there where the shortfall in monthly TDS is not bona fide, that is not a genuine recalculation under section 392(5)(c), but a deliberate deferral. Interest under section 201(1)(a) now under new act is 398 subsection 3 is validly leviable for the period of the deficiency. Then this allows for non-deduction. There was a section under 1961 Act section 40A Roman 1A, and under the new Income Tax Act the similar section is there, section 35 clause B. So all section says that 30% of any sum shall be disallowed payable to a resident on which tax deductible at source under chapter 17B, and such tax has not been deducted or after deduction has not been paid or before the due date specified under section 139(1). So if any tax has not been deducted, or if after deduction but not paid before the due date of filing of return of income, then such amount, 30% of such amount shall be disallowed under section 40A(1)(a). This was the earlier provision. And if there was some relaxation also provided further that where an assessee fails to deduct the whole or any part of the tax under chapter 17B, but he is not deemed to be an assessee in default under the first proviso to section 201(1), it shall be deemed that assessee has deducted and paid the tax on the date of furnishing of return of income by the payee referred to in the said proviso. So there is another condition that you have failed to deduct, but 30% disallowance will not be made if the person to whom you have made the payment, he has filed his return of income and he has included the payment made by you in his return of income. Say for example, we have made payment to a contractor of rupees 1 crore. Claim the whole of 1 crore rupees as an expense in the trading account. Then we have made the payment. If he has filed his return of income and included that 1 crore in his return of income, and then the person who has made the payment, the person who is in default will not be deemed to be an assessee in default, but there is a condition that the date of furnishing of return of income date of furnishing of return of income by the payee referred to in the said proviso will be treated as date of payment. So if the contractor, say for example, the due date for filing of return of income by the person who has made the payment is 31st October. जिसने पेमेंट किया उसकी 31 अक्टूबर लास्ट डेट है आईटी रिटर्न की. But the person to whom we have made the payment, he is a contractor. He is not subjected to tax audit. So he filed his return of income in the month of December. So after your due date of 31st October, he has filed his return, but after your due date. So in the current tax year, the amount will be disallowed. And since the payment has been return has been filed by the payee after 263(1) due date, then it will be allowed as an expense in the subsequent year. 30% amount will be allowable in the subsequent year, and in the current year, 30% will be disallowed. So similar provision is there under section 35 subsection B. Declaration for no deduction at source. Earlier section was 197 capital A. Now in the new Income Tax Act, section 393 subsection 6, the deduction of tax shall not be made under provisions referred to in column C of the specified table in the case of a person as specified in column B of the specified table if such person furnishes to the person responsible for paying any income or sum of the nature referred to in such provisions a written declaration in duplicate in such form and manner may be prescribed, that the tax on such person's estimated total income of the tax year in which such income or sum is to be included shall be nil. So this is the section 393 subsection 6 of the new Income Tax Act, similar to old section 197A. Any person can furnish a declaration to the person who is responsible for TDS that tax on such person's estimated total income of the tax year in which such income is to be included shall be nil. So dear friends, here I want to mention one thing. The system of reading the new Income Tax Act is quite different. If we will take decision only on the basis of this paragraph regarding declaration, earlier declaration, say for example, was 15G, 15H declaration. As you all may be aware that in case of 15G declaration, his taxable income should not be exceeding the maximum amount liable for tax. And in case of 15H, that is person senior citizen. In case of senior citizen, tax liability should be nil. So 15G, we have to see the basic exemption limit. And in case of senior citizen, we have to see the tax. If tax is nil, even if he's in case of senior citizen, even if his income is exceeding the maximum amount not chargeable to tax, but his tax liability is nil, then no TDS is to be deducted. He can furnish declaration in 15H. So here they have mentioned in this section 393 subsection 6 that tax on such person's estimated total income of the tax year in which such income or sum is to be included. So here at the start of, there is a table just after, but at the start of this section 393 subsection 6, they have only mentioned that tax should be nil. They have nowhere mentioned that his estimated total income should not exceed maximum amount chargeable to tax. Here they have not mentioned, which is applicable for the person who is not a senior citizen. So next slide we will see declaration for no TDS. Who can furnish such declaration? Earlier form 15G, 15H, similar declaration can be furnished as per section 393 subsection 6 serial number 1 and 2. Any individual being a resident, payment of accumulated balance due to an employee referred to in 392 subsection 7. So this is PF balance, insurance commission, rent referred to in 393 subsection 1 serial number 2, income in respect of units referred to in 393 subsection 1, interest referred to in 393 subsection 1 table serial number 5, 1 and 2. If the bank is making payment to senior citizen exceeding interest of rupees 1 lakh, or in case of other than senior citizen interest exceeding rupees 50,000, or payment in respect of LIC policy referred to in 393 1 serial number 81, and dividend. So in these cases, any person who is an individual being a resident can furnish a declaration. Or in case of any person not being a company or a firm or an individual covered in serial number 1. Then for the purpose of serial number A to F, any other company or a firm or individual, not being a company but a firm or an individual except individual, this person can furnish a declaration. So these persons can furnish the declaration like form number 15G and 15H for note deduction of tax. Here the next note is quite important, the note which is after the 393 subsection 6 table. Here this note is important. The provision of this subsection shall not apply to a person referred to in column B of the specified table other than an individual being a resident who is of the age of 60 years or more at any time during the tax year if the aggregate of amount of any or income or sum of the nature referred to in the provisions mentioned in column C of the specified table credited or paid or likely to be credited or paid during the relevant tax year exceeds maximum amount not charged. So here they have mentioned. So if you have read only the para before the table, then your decision can be wrong. So here it is a note. By way of note, they have mentioned that the conditions, these conditions can be availed by any person who is not a senior citizen if his income is not exceeding maximum amount not chargeable to tax. So if all the aggregate of all these payments is exceeding maximum amount not chargeable to tax, and that person is not a senior citizen, in that case, that person is not eligible to file the declaration because his income is exceeding. Even if his tax is 0, but if his income from all these sources is exceeding the maximum amount not chargeable to tax, he cannot furnish the declaration. But if senior citizen, his income is exceeding maximum amount not chargeable to tax, but tax liability is nil, he can furnish the declaration. So the pattern of reading this new Income Tax Act is quite important. Before taking any decision on any section, any interpretation, any table, we should have to read the paragraph just before the table, notes mentioned at the end of table, and interpretation mentioned at various chapters, relevant chapters. All interpretation can be should be read, and definition chapter section 2 should be read, and only thereafter we can give any decision. Section 395 subsection 1, old section 197, where tax is required to be deducted on any income or sum under this chapter, then subject to rules made under this act, the payee may make an application before the assessing officer for deduction of income tax at lower rate or nil deduction. So if say for example, if the person is not a senior citizen, his income from all the sources as mentioned in earlier slide is exceeding the maximum amount not chargeable to tax, then even if his tax liability is nil, so he may approach to the assessing officer, or if his tax liability is not so much, so for lower rate or nil rate, he may approach to the assessing officer by way of filing a form, and the assessing officer will issue a lower rate certificate. Similarly, in case of old section 195 subsection 2 and new section 395 subsection 2, the person responsible for paying to a non-resident, if any of the person who is making payment to any non-resident and any sum as mentioned in 393 subsection 2, table serial number 17, only for table serial number 17 we can furnish file the lower rate on certificate before the assessing officer, may apply to the assessing officer in the prescribed form and manner, where he considers that whole of such sum would not be chargeable in the case of the recipient. The application shall be for determination of appropriate proportion of sum chargeable to tax by the assessing officer in the prescribed manner. And when such determination is made, tax shall be deducted under section 392, 393 subsection 2, table serial number 17. only on that proportion of the sum which is chargeable to tax. So proportionate TDS will have to be done. And similarly for TCS, where tax is required to be collected on any amount under this chapter subject to rule made under this act, the buyer or licensee or lessee may apply before the assessing officer for collection of tax at lower rate. The assessing officer, on being certified that the total income of the buyer, licensee or lessee justifies collection at lower rate, shall issue an appropriate certificate, and when such certificate is issued, the person responsible for collecting the tax shall collect at the specified rate till its validity. Every person deducting or collecting the tax shall issue a certificate to the deductee or collectee. So like form number 16, form number 16A, the deductor or collector will issue a certificate to the deductee or collectee. आ रहा है आवाज आ रहा है नहीं आ रहा
चालू देखो हाँ झाले माझ्याला कनेक्ट होते
ये
झालं नाही माझं कनेक्ट असं जाऊ दे
continue. Yes. Section 395, subsection 5 and 6. So the assessing officer may cancel the certificate granted under subsection 1 or 3 after giving reasonable opportunity to the applicant. There is another new section, subsection 6. The application referred to in subsection 1A may also be filed before the prescribed income tax authority, subject to prescribed condition, and such authority or electronic verification of the contents may either issue a certificate for deduction at lower rate or no deduction, or reject the application for non-fulfillment of prescribed condition or incompleteness. So earlier was form number 15G, 15H. Now that form number has been form number 121. Earlier form number 13. Now it is form number 128. Earlier form 15E. Now it is form number 129. Application by the payer under section 395 subsection 2 or section 400 subsection 3 for determination of appropriate chargeable proportion of a non-salary sum payable to a non-resident. Earlier was form number 26A, CA certificate for so that the assessee shall not be deemed to be an assessee in default. Now that form is form number 149. Earlier was the form 26A. Irrespective of anything, so earlier was section 206 AA, 206 C. Now under the new act, that section is 397 subsection 2 clause A. Irrespective of anything contained in any other provision of this act, every person entitled to receive any amount on which tax is deductible or paying any amount on which tax is collectible shall furnish his valid pen to the person responsible for deduction or collection of tax. Otherwise, double tax will be deducted from his income. Consequences of non-furnishing of pen or wrong furnishing of the pen. In case of failure to comply with the clause A, tax shall be deducted at the higher of the rate specified in the relevant provision of the act, or the rate or rates in force, or 5% where tax is required to be deducted under 393 subsection 1, table serial number 82, 194Q, 85 or 194O, or 20% in any other case. So like 194Q and 194O, the maximum TDS rate in case of wrong pen or no pen, 5%, and in any other case, it will be 20%. In case of TCS, it shall not exceed 20%, but it should be twice the rate specified in the relevant provisions or 5%. there is a judgment of Delhi High Court in case of Danisco India Private Limited. In this case, Delhi High Court held that Section 206AA cannot override the beneficial provisions of DTAA entered into by the central government under Section 90 of the 1961 Act, where a DTAA specifies a lower rate. That rate prevails even in the absence of pen, subject to other prescribed documentation. Then Honorable Supreme Court in case of CIT versus Manthan Software Services Private Limited, it was held that Supreme Court dismissed the revenues appeal and held that DTAA provisions being binding under Article 51C of the Constitution override the domestic machinery provisions. So old 206AA will be override by DTAA provisions. So the 20% pen-based rate cannot exceed the treaty specified rate merely because payee lacks a pen. So even if payee is a non-resident, he is not having a pen, but 20% TDS will not be deducted. If DTAA rate is 10%, then only 10% will be deducted, even if the payee does not have the pen. Section 397, subsection 3, clause A, every person responsible for deduction or collection of tax at source, employer referred to in 392, pay the amounts so deducted or collected to the credit of central government within the prescribed time. Every such person, after paying tax to the credit of central government, shall deliver or cause to be delivered to the prescribed income tax authority a statement of prescribed within the prescribed period in the prescribed form verified in the prescribed manner. So TDS statement has to be filed under section 397(3)(b). Certificate to buyer, licensor or lessee. Every prescribed authority under clause B shall deliver a statement in the prescribed form and manner to the buyer or licensor or lessee referred to in 394(1). Information on non-resident payments. Information on non-resident payments. Section 397(3)(d). Every person responsible for paying to a non-resident, not being a company or a foreign company, any sum, whether or not chargeable under this Act, shall furnish information relating to payment of such sum in the prescribed form and manner. So like Form 50CA CB, this is the form. Correction statement. Every person referred to in clause B or E may correct any discrepancy, update any information furnished in statement delivered under those clauses by delivering a correction statement in the prescribed form and verified in the manner within 2 years from the end of the tax year in which such statement was required to be delivered under those clauses or under Section 200 of the Income Tax Act 1961. So this is a change by the new Income Tax Act that earlier we could file correction statement for 6 years. But now that time limit has been reduced only to 2 years. This is a declaration by some banks to the government regarding the payments made by the bank to the persons from whose income no TDS has been deducted because of less than threshold. So there was a earlier form 26Q and QA. So now new form has not yet been notified, but there is a provision that the persons to whom payment has been made less than threshold, that is also to be required to be reported to the government as per Section 397(3)(g)(1). Assessee in default, Section 201 and 206C. If any person, including principal officer of a company who is required to deduct or collect any amount under this Act, referred to in 392(2)(a), being an employer, does not deduct or pay or does not collect or pay or after so deducting fails to pay whole or any part as required by or under this Act, then such person shall be deemed to be an assessee in default, in addition to any other consequences. So if any person is deducted but not paid or failed to pay, then he shall be deemed to be an assessee in default, or failed to deduct or collect, then he will be covered under 398(1) default. Exception. So if any of the TDS person who has failed to deduct the TDS or TCS, but the payee has filed his return of income under section 263, and he has taken the amount into account in computing in that return of income, paid the tax due on the income declared, and the person furnishes a certificate to this effect. So earlier there was form number interest for default, old section 206(7)(6)(c) subsection 7 and 201. If any of the person has made default in payment of TDS or TCS, then he will be liable for interest at the rate of 1% for every month or part of a month, or the amount of such tax from the date it was deductible, collectible to the date it is actually deducted or collected, and at the rate of 1.5% for every month or part of a month from the date it was deducted or collected to the date it is actually paid. So even if in the earlier slide I had told that if the payee or the deductee has filed his return of income, but the person who was liable to deduct failed to deduct. So payee has filed his return of income. So the date of filing of return will be deemed to be date of actual payment of TDS. So up to that date, the percent per month will have to be paid by the deductor, is an assessee deemed to be default. The interest shall be paid before furnishing statement under 397(3)(b). If the person referred to in subsection 1 is not deemed to be an assessee in default, then interest is payable from the date the tax was deductible to the date of furnishing the return of income by the concerned payee or the buyer, licensor, licensee. Time limit for order, section 201, subsection 3. No order under subsection 1 deeming a person to be an assessee in default fails for failure to deduct or collect whole or any part shall be made after 6 years from the end of the tax year in which tax was deductible. So any order relating to determination of TDS liability cannot be passed after 6 years from the end of the tax year in which tax was deductible or collectible. After 2 years from the end of the tax year in which the correction statement is delivered under 397. TDS and TCS survey. So whether TDS department can carry out any TDS or TCS survey, any person who is liable for TDS? Yes, TDS department can carry out, but there are some restrictions. So under the Income Tax Act 1961, it was covered under section 133A, subsection 2A. As per section 133A, 2A, Income Tax Authority can carry out survey at any office or any other place where business or profession is carried on for verifying that TDS, TCS has been deducted or collected in accordance with law. But TDS, TCS survey cannot be carried out at a charitable or religious trust or institution or at the office of any central government, state government or local authority, because no business or profession is being carried out by them, because you will see here that in these starting 3 lines, it is mentioned that TDS survey under section 133A subsection 2A can be carried out at the place where business or profession is carrying on. So any person who is subjected to TDS TCS, who is liable for TDS TCS, and he is carrying on business or profession, then TDS TCS survey can be carried out for verification of proper TDS TCS by the department. But since the charitable or religious trust is not carrying out any business or profession, religious trust is not carrying out any business profession, central state government no business profession, local authority no business, therefore no TDS TCS survey can be made at these places under section 133A subsection 2A of the 1961 Act. But there is an important change under the new Income Tax Act. Under the new Act, 133A subsection 2A is mentioned under section 253 subsection 4 of the new Income Tax Act. As per this provision, here now they have changed the drafting. They have mentioned that any office or any other place where business or profession or activity for charitable purpose. So now they have covered charitable purpose also under the new Income Tax Act. Under the old Act, charitable activity was not covered, but under the new Income Tax Act, charitable is covered. So therefore, now any place carrying out charitable activities, say for example, educational institution, medical institutional, are also subjected to TDS TCS survey, but still central government, state government, local authority are not covered under TDS TCS survey under the new Income Tax Act section 253 for late fee. Earlier, the late fee was covered under section 234E. Now, under the new Income Tax Act, late fee is covered under section 399, subsection 1A and C, adjustment or processing. Sorry. This is relating to adjustment and processing of the returns of income. Section 200A was relating to processing of TDS returns. So now that thing has been covered under section 399. So TDS TCS, including a correction statement, shall be processed as follows. Amount deductible, TDS TCS, any arithmetical error, any incorrect claim apparent from any information in the statement, interest. So if there is any arithmetical error, any incorrect claim from any information, or any interest shall be computed on the amounts deductible or collectible as reflected in the statement. The fee, if any, shall be computed as per section 427. So earlier it was 234E. Now 234E is section 427 to calculate the late fee. So these calculations will be made while processing the TDS or TCS statement. Then the amount payable or refund due to the director or collector shall be determined after adjusting the amounts under clause B and C against any amount and any other amount paid by way of tax, interest or fee. An intimation shall be prepared and generated, refund due as per the determination shall be granted to the deductor and collector. Then here subsection 2 and subsection 3, the intimation shall be sent within 1 year from the end of the tax year in which the statement is filed. So any TDS TCS statement processing intimation can be sent within 1 year only from the end of the tax year in which the statement is filed. Under subsection 3, it has been mentioned under section 399 subsection 3 that CBDT may make a scheme for centralized processing of statement. So CPC Ghaziabad or CPC TDS is functioning under this subsection 3. Earlier this was section 200A subsection 2. So CPC TDS got the authority for processing the returns of TDS as per section 399 subsection 3. So they have mentioned that they can process all returns for these functions mentioned under these A to F. A, B, C, D, F. So for all these purposes, the CPC is authorized by the board. But earlier, under section 200A subsection 2, there was some drawback, because section 200A subsection 2 mentioned that CBDT may make a scheme for determining tax payable or refund due only. Therefore, under the old Income Tax Act, CPC was not authorized to determine any interest payable or not authorized to any late fee. Processing could be done, but it could not be done by the CPC because subsection 3 itself did not empower. So earlier 200A subsection 2 did not empower the CBDT to authorize the CPC. Incorrect claim. An incorrect claim apparent from any information in the statement sent. So under section 402, definition of incorrect claim is given. Late fee. So late fee can be imposed where a person fails to deliver or cause to be delivered a statement within time prescribed under 397(3)(b, he shall be liable to pay by way of fee rupees 200 for every day during which the failure continues. The amount of fee referred to in subsection 1 shall not exceed the amount of TDS, TCS. So 234E, 200 rupees per day late fee should not exceed the amount of TDS or TCS, and it shall be paid before delivering or causing to be delivered the statement. So before furnishing the TDS, TCS statement, late fee should be paid. Penalties and prosecution. Failure to deduct. If anyone who is liable to TDS, he fails to deduct the whole or any part of the tax as required under chapter 19B, or pay or ensure the payment of whole or any part of the tax as required note 2 below the table 393(3) or note 6 to section 393(1), the assessing officer may impose a penalty equal to the tax which such person failed to deduct or pay. So if any person fails to deduct the TDS, then he may be liable to penalty equal to the amount of tax which was required to be deducted. There is a judgment of Kerala High Court in case of Subscriber Chit Fund Private Limited versus CIT. High Court allowed the appeal of the assessee and held that non-remittance of TDS under section 194C of chapter 17B is not covered by 271C1B of the Act to attract penalty. So High Court held that if any person has deducted the tax, but he has deposited it delayed by time. So he has deposited, but delay. So there is no non-deduction. If there is no default of deduction, then penalty under 271 capital C cannot be levied. Penalty under section 271C can be levied if there is whole or any part of the tax is not deducted. Then only it can be done. Then there is a penalty of rupees 500 per day under the old section 272A subsection 2 and under the new Income Tax Act section 465 subsection 2. For the following defaults, there is penalty of rupees 500 per day. If any person who has received form 15G or 15H, but those are not furnished to the government, information is not furnished to the government by way of online system, then 500 rupees per day default penalty will be levied under section 465 subsection 2. And delay in furnishing a certificate as per section 203 or 206C, like earlier form 16A, 16B and SOLA form 16, 16C, 16D, 27D. If this certificate or not are not timely given to the deductee or collectee, then 500 rupees per day penalty. Presently, however, it is seen that most of the deductor and collector are not giving such form, because they always say to the deductee that kindly you may see your form 26AS or AIS, you will find that information. But still that penalty is there of rupees 500 per day per form. There was a judgment in which crores of rupees of penalty was levied on a Jaipur. Jaipur, ITAT had given a judgment on Japanese company. Japanese company made payment to head office at Jaipur, and many of the deductee were not issued Form 16A. So the company was levied crores of rupees of penalty under this section 272A. So we must also advise our clients who are filing this TDS TCS statement to kindly download the Form 16 and 16A timely. Delay in furnishing particulars of perquisitioning Form number 12BA. If employer does not furnish 12BA timely to the employee, then also 500 rupees per day penalty may be imposed on the employer. Delay in delivering Form number 27C by tax collector to the CCIT. If the assessee has received Form 27C from the collectee, but that has not been handed over to the CCIT of the jurisdiction, then penalty of rupees 500 per day can be imposed if deposited after 7 days from the end of the month. Delay in furnishing of the Form number 26QAA. Failure to collect failure to furnish the statement. Now that penalty is under section 461 in the new Income Tax Act. If a person is required to deliver a statement, so that is TDS return or TCS return under section 397(3)(b), and he fails to do within the prescribed time or furnishes incorrect information in the statement, the assessing officer may impose a penalty of not less than 10,000, but which may extend to rupees 1 lakh. So if any of the TDS statement is not furnished within prescribed time, that penalty under 271H section 461 can be imposed up to rupees 1 lakh. No penalty shall be delivered under subsection 1A for delay in filing, non-filing, if TDS, TCS along with fee and interest, if any, was paid to the credit of the central government and the statement was delivered before expiry of 1 month. So this is very important change under the new Income Tax Act. We must be very much careful. Under the old Income Tax Act or before 1st April 2025, this time limit was 1 year. So if you have deducted the TDS, you have deposited it, but you have not furnished the TDS or TCS return, then before 1st April 2025, you could furnish that return within 1 year. But now under the new Income Tax Act, section 461 subsection 2 levies a responsibility that it should be filed within 1 month from the time prescribed. So TDS returns due date is, say for example, 31st July. If you have not filed it, you can file it within 31st August. If you have filed after 31st August for the first quarter, then you may be levied penalty under section 461 of rupees 1 lakh. Up to rupees 1 lakh. So we must be careful that time limit is or only 1 month. So delay from 1 month may attract penalty of rupees 1 lakh. Failure to furnish information. So information has to be furnished by the CA in Form number 15CB. If the CA fails to furnish the information in Form number 15CB, he may be liable to penalty of rupees 1 lakh under section 271I, and new section is 462. Failure to pay the TDS. So this is a very important provision of the TDS, because every default Income Tax Department many times wants that how the person is defaulter and whether he can be taken to prosecution, he may be prosecuted for his default. So if any person who has deducted the TDS but he has not deposited, then he may attract the prosecution under section 276B or new section 476. So there is again an amendment in the new Income Tax Act also. So before the amendment, what was the position? This is mentioned in this slide. if a person fails to pay the tax deducted at source by him to the credit of central government as required under Chapter 19B, or pay tax or ensure payment of tax as required under Note 2 below the table in 393.3 or Note 6 393.1, he shall be punishable with rigorous imprisonment for a term not less than 3 months, extendable to 7 years, and with fine. This section does not apply if payment under subsection 1A has been made to the credit of central government on or before time prescribed for filing the return. So, under the new Income Tax Act, before amendment of the Finance Act 2026, as per Old Income Tax Act and as per Income Tax Act 2025, pre-2026 amendment, there was a provision that this section does not apply if the payment under subsection 1A has been made to the central government on or before the time prescribed for filing the statement under 397(3)(b), and now under the new Income Tax Act by amendment of Finance Act 2026, there has been change. If a person fails to pay the TDS or pay tax or ensure payment of tax in respect of winning from online game or virtual digital asset, all these defaults are also, if these TDS defaults are also there, then there there may be simple imprisonment up to 2 years, or fine, or both, where tax amount exceeds 50 lakh rupees, or simple imprisonment up to 6 months, or fine, or both, where the tax amount exceeds rupees 10 lakh but does not exceed rupees 50 lakh, or fine in any other case. So under the new Income Tax Act, we must be very much careful that they have mentioned that if a person fails to pay tax at source as required under Chapter 17B, then he shall be punishable with so and so penalties and fine. Then section 477, TCS default. Old section 276BB. If a person fails to pay TCS to the credit of central government, he shall be punishable with rigorous imprisonment for not less than 3 months, extendable to 7 years. This section does not apply if the payment has been made to the credit of central government on or before time prescribed for filing a statement. Section 477 is amended by Finance Act 2026. Punishable slabs. If a person fails to pay TCS to the government, he shall be punishable with simple imprisonment up to 2 years, or fine, or both, where tax amount exceeds 50 lakh rupees, with simple imprisonment up to 6 months, or fine, or both, where tax amount exceeds 10 lakh but does not exceed 50 lakh, or fine in any other case. No punishment for reasonable cause. So old section 278AA and under new Income Tax Act section 486. If any person before the commissioner proves that there was some reasonable cause for such failure to deposit the TDS or TCS, then there should not be any punishment. Under the old section 276B, in my opinion, under the section 276B, before 1st April 2026, there could not be any prosecution for delayed deposit of the TDS. However, many of us will find that across India, many of the CIT TDS issued prosecution notices for delayed deposit of the TDS by way of notice, show cause notice under section 276B. But in my opinion, if any TDS has been deposited at any time, even delayed by 1 year or 2 years or 1 month or 5 months or 7 months whatsoever, but there could not be any prosecution for delayed deposit of TDS or TCS, because there is, you will read the language, this is mentioned here. If a person fails to pay to the credit of central government the tax deducted at source by him as required by or under provisions of Chapter 17B, he shall be punishable with rigorous imprisonment. So in my view, the correct and strict interpretation is that punishment attaches only if the TDS is not paid at all. So if TDS is paid, even if delayed, no prosecution can be there. I have written an article on this topic also, that if there would have been a comma here, tax deducted at source by him, and if there would have been a comma after the word by him, then only department could do prosecution, but there is no comma, so importance of comma is there. No comma is there, so interpretation is different, but department is making different interpretation and they are making prosecution. But under the new Income Tax Act 2025, now the drafting has been changed. So if the TDS has not been deposited within due date of TDS statement filing due date, then now department is empowered to prosecution. So earlier under 276B, no prosecution could be there. But under new Income Tax Act, if TDS is deposited beyond the quarterly TDS statement due date, then department may certainly prosecute. So these are various definitions given under section 402. Work. Work is for the purpose of section 194C or section 393 subsection 1, 194C TDS on payment to contractors. So in this Finance Act 2026, there is an amendment which has been mentioned in red here, includes the supply of manpower to work under another supervision, control and direction. Supply of manpower to work under another's supervision. So here under this definition, they have mentioned that any person. So they have mentioned the word person. So person does not include central government or state government. So in case of central government, state government, again, there will be some confusion that whether they are liable for TDS in case of manpower supplied to work under another supervision or not. Because, and you will see the definition given under 402(47), they have mentioned that any payment by any person includes the supply of manpower to work under another supervision, control. What is the definition of buyer? Governs buyer, section 402(6). This is definition, governs who must collect tax under 393(1)(8) and 1 to 8 cover in full. So who is the buyer? This is mentioned here, 194Q, etc. For this licensor lessee definition are given 402, 21 and 22. Seller definition is given under section 402(33). So earlier form 15G, 15S, now it is form 121, 27C, 127, 13 is 128. As I had already told in earlier slides, 15CA is 145, 15CB is new form number 146. So CA certificate, which is form number 15C, now form 146. Information to the employer is to be given in form number 122. Employer to furnish employee particulars of perquisite in form number 123. Earlier it was 12BA. So if any employee wants to furnish evidence of claims of his HRA, LTC, LTA, house property loss, etc., then he had to furnish earlier in form 12BB. Now he has to furnish this in form number 124. Application by payee for certificate authorizing receipt of interest or sum without TDS. So 15C, 15D, now it is form number 126. CA certificate, which was form number 26A, 27BA. So both form has been merged in form number 149. So CA certificate of so that assessee will not be deemed to be an assessee in default as per section 398 subsection 2. New form number is 149. AIS. So AIS new section is 510. Old section was 285BB and all form number was 26AS. So now it is 168. Form number 168. So statement of financial transactions, section 508. Old section was 285BA. So So earlier this was form number 61A, now it is form number 165. Form 16 salary certificate, form 130, 16A 131. 49B, I had already told that this has been divided in two parts. Form 24Q, now form 138. 26Q, form 140. 27Q, 144. 27EQ, 143. 15 CACB, 145. 26A. Number 26 tax audit report. There is a para 51. In that para, there is some important drafting which either government may come out with some correction that if there is a short deduction, then also there will be 30% of the disallowance. So earlier there was no such column in the old form number 3CD, and there is no such provision in the new Income Tax Act. But in the form number 26 tax audit report, in the TDS reporting para number 51, they have mentioned that if there is any short deduction, that will also be liable for 30% disallowance. So maybe possible government may come out with some correction in TDS reporting disallowance in tax audit report in new Income Tax Act form number 26. CBDT has from time to time issued advisory emphasizing accuracy and TDS correction statement. Therefore, earlier there was time limit of 6 years. Now that has been reduced to 2 years, because even after 2 years, 3 years, 4 years, the person are revising the return. So deductee or collectee is certain. So in the 1961 Act, section 200, subsection 3, TDS correction statement could be filed up to 6 years. So with and that amendment was itself was made from 1st April 2025, provided further that no correction statement shall be delivered after the expiry of 6 years from the end of the financial year in which the statement referred to in subsection 3 is required to be delivered. Because earlier there was no time limit. So under section 200 subsection 3, this time limit was mentioned and it was mentioned with effect from 1st April 25 that it cannot be done after 6 years. So now that time limit is going to be changed. TDS order time limit. So TDS order can be passed earlier under section 201 and now under section 398 subsection 5. So any TDS order cannot be passed after 6 years from the end of the tax year in which tax was deductible or collectible, or after 2 years from the end of the tax year in which correction statement is furnished. So, dear friends, this was my discussion on TDS TCS and TDS on NRI payments.
Thank you, sir. We will now open the floor for the question and answer session. Attendees present here can raise the hand, and our online participant can drop their queries in the chat box.
So one query is that my client imports swine food and sells in India. Whether he is liable to collect TCS? No, TCS on sale is not there. In case of partnership firm for 25-26, books of account will be finalized in September 26 and remuneration will be asserted in 26, September 26. When to deduct and deposit TDS? So as per the Income Tax Act, TDS has to be deducted in the month of March itself because this is the end of the financial year and it has to be deposited within 30 days, that is up to 30th April. So even if books of account are going to be finalized, this is our practical thing. As per the Income Tax Act, remuneration has to be finalized on or before 31st March and TDS cannot be postponed. So whatsoever TDS you have done, and if for practical reason you are not able to determine it, whatsoever you have determined, you may deposit and thereafter you can revise the TDS statement. So this can be done. If you have deducted, because you will make the journal entry on 31st March in the month of September 26. So department will say that you have withheld the TDS for 6 months. So you will be defaulter for 6 months. You have held the government money for 6 months. So there may be other proceeding and penalty also. So it is advisable that it should be deposited within the due date specified, that is 30th April. Yes, NRI and non-resident will attract same rate of TDS which has been specified under the section itself or which has been specified in the first schedule part 2. For form number 41, country TIN is sufficient, PAN is not mandatory. I have already discussed the case laws also in this regard. Yes, rates in force is determined shown under the first schedule of the Income Tax Act. Yes, rates in force is 36.4 and 31.2. That is correct. In case of change in particular paint, in which form number has to be? So change in particular, same form has to be furnished. Out of India. His strategy, he is having 2 plates, which were given on rent also. In this case, I resident tenant have to deduct TDS from payment of rent, and at what rate and what TDS? No. At one place you have mentioned in a query that a person who act as LIC agent in India and worked as computer engineer in an Indian company up to 31st March 2023. Now he is working as employee in a company out of India from 1st April 23. His status is NRI. He is having 2 flats at Bengaluru, which were given on rent, and also doing transaction of Indian share purchase and sale. In this case, resident tenant have to deduct TDS from payment of rent, and at what rate? So resident tenant will deduct TDS treating you as a non-resident Indian. So TDS will have to be deducted under section 393 subsection 2 clause 17. Because now you are the non-resident Indian. What about TDS rate on LIC commission? TDS rate on LIC commission is 2% now. He has not given intimation to LIC as his NRI status. So if he is NRI, then TDS will be deducted at the rate of 31.2% and not at the 2%, because 2% is applicable only to the resident person.
Thank you very much, sir. Now, I will hand over mic to Joint Secretary Kailash Kashit sir for some secretarial announcement. Sir, please.
Namaskar. I'm Mr. Kailash Kasi, Joint Secretary of the MTPA. I'm stand here to announce some secretarial announcement regarding Golden Age Pass 2026-27. Respected members, in today's changing text world, the best investment in our knowledge. That's why the MTPA has launched Golden Age Pass 2026-27. With one enrollment, you get 10 premium courses, plus 14 study circle lectures, plus recordings, plus course in English and Marathi, 1 year tax tribune subscription. Total value approximately cost at rupees 18,700. But for members, it is available at highly subscribed price as super early bird offer valid till 31st July 2026 only rupees 6,900. This is not an expense, it is an investment in your growth. Please enroll today. Our team is here to help you. Let us learn together and grow together. Thank you. Thank you very much. Over to Nancy.
Thank you very much, sir. Now I invite our Vice President, Advocate Gyaneshwar Narode sir, to propose formal vote of thanks.
Yes, respected dignitaries and professional friends, good evening. We have now reached the conclusion of our 2 days TDS Conclave 2026. It's my privilege to stand before you on behalf of Maharashtra Tax Practitioner Association and All India Federation of Tax Practitioners, Western Zone. As Vice President of MTPA, I am honored to present this formal vote of thanks. Over these 2 days, we had 4 brilliant sessions. Our eminent speaker, CA Parikshit Aurangabadkar, CA Shravan Suratwalas, and CA Rajesh Mehta sir shared their deep insight with us. They simplified the complex topic and gave us the complete clarity on the new TDS and TCS framework under the Income Tax Act. Their guidance will be incredibly useful where we face the doubt in our practice. On behalf of the both association and all the attendees, I express my deepest gratitude to all our faculties. A special thank you to our speaker, dynamic personality, CA Rajesh Mehta sir, who traveled from the Indore to Pune for delivering such a very insightful lecture despite the heavy rain. I must thank you, our managing committee. Choosing this vital topic at this exact time was the perfect decision, especially as we prepare to submit the first TDS return under the new Income Tax Act 2025. A big thank you goes to our participants who had an overwhelming response with the 533 members registering from all across the Maharashtra and beyond. Thank you for your active presence and for making this event as a grand success. Finally, I want to thank Team MTPA and AIFTP West Zone for excellent technical arrangement over these 2 days. Thank you once again to one and all. Thank you. Thank you very much.
Thank you.